good afternoon. You've tuned into CNBC TV18. You're watching MF Corner and I'm Vinnii Motiwala. Thank you so much as always for tuning in. Now today what we're going to talk about and deep dive into is momentum funds which seek to build a momentum in the markets. We tell our viewers why these funds are going to be important and how they can capitalize on momentum funds. Is it the right time to look at it? We'll discuss all of this with Sanchita Mukherji, managing partner and mutual fund distributor at Talk the Walk. Sanchita, good afternoon. Thank you so much for joining in with us on the show. Before we dive into the current trends, if you could just start by telling us what are momentum funds? How is it different from other mutual funds?
Thank you so much for having me over, Vinnii. It's always a pleasure to be at your show. Well, to put it very simply, momentum funds and momentum investing is essentially having stocks in the portfolio of a fund which has shown a recent price uptrend, a very significant price uptrend in a specific period in the past. To put it in very layman terms, that is known as momentum investing, with the objective that, yes, this trend will also hold true in the near future, and these stocks which have shown a positive uptrend of a price momentum, so as to speak, will continue to hold that trend of the price momentum in the next few months. So that is typically known as momentum investing. It is very different from the rest of the investing parlance in mutual funds, so as to speak, in growth mutual fund, for example. Growth mutual funds, for example, true to its name, invest into stocks which show a potential to grow over the overall market and their industry over a long-term capital appreciation. That's the objective. So they would look at price to earning ratios, they would look at PEG ratios and all of that. So that is typical. They would also look at the earnings forecast, new innovative products, good to go market strategy, new opportunities in the market. So that is growth investing, right? Momentum investing typically looks at quantitative indicators and technical analysis to shorten down those specific stocks which have risen in the last, say, 3 months, 6 months, 8 months, and tries to capture a trend with the objective that this trend may actually hold true in the short term. But it's a very risky strategy, because if there is any trend reversal, then the downturns are very, very sharp in momentum investing.
So the main risk then comes in for what? For momentum funds. When I'm investing in a momentum fund, what is something that as an investor I can look out for before I start investing, and what are the cons of this?
All right. So first and foremost, momentum investing is typically very suitable for investors who are very sophisticated, because it is a very high-risk strategy. Let's make no qualms about it. And also people who have a stomach to weather very significant price volatilities. Right now, why would I say that? For example, somebody who has a trader mentality, right? They would think that, all right, what I'm seeing over here is a trend, because there's been strong price momentum on this trend based on quantitative factors in the last 3 to 6 months. Let me try and capitalize this trend in the next 3 to 6 months, right? So that is the objective of investing in a momentum fund, to capture a trend in the near term, in short to medium term. Now, if that trend were to reverse, then the correction can be very sharp in funds like momentum funds. However, very seasoned people might take a view that, all right, I'm in active management. So momentum investing can also be passive and active management, ETFs versus active funds, and they might take a long-term call. But however, it's very important for all retail investors, especially, to know that they need to go to a registered investment advisor, because typically what happens, any new flavor of the season or a fad, it gets a lot of undue attention. And if you're not aware that these downtrends, sharp reversals can happen, you might land up making a terrible choice for yourself. So please understand, you need to go seek advice from a registered investment advisor in terms of, if this is your specific situation, does this fit into your overall portfolio allocation? Is this indeed your risk profile? Are you coming from a trading mentality at all? Are you a strategic long-term investor? Does this fit in with your overall objectives? So this needs to be very, very well communicated to the retail investor, that this is not something that you can just take in as a fad and try and make a quick buck out of it in the next 3 to 6 months, because if the trend were to reverse, and also in momentum investing, let's be mindful of the fact that there's high turnover, right? And every high turnover can have a high cost in terms of taxes paid, entry, exit, all of that, right? So because a trend, even if it's active management, the fund manager will have to be very, very mindful that if there is a trend exhaustion, for example, if the trend were to collapse, then he would immediately need to shift
to another
position.
trend.
There is a cost to that, yes, to another trend. So there is obviously costs associated with that.
Okay. You know, Sanchita, you did highlight a few points also in terms of the difference between growth fund as well, between momentum fund and growth fund. But also, isn't it an option that I could look at sector funds also, right? This thematic funds, sector funds also are theme specific. Now, if I know if a theme is going to do well, maybe I can add it in the lump sum for a year and then, you know, that's the trend I'm betting on. Isn't that similar? What is the difference between all of this?
That is a very good question. And I'm very glad you asked that, because that is typically some would come into the mind of an investor. So now I will give you the clear differentiation or the demarcation between a momentum fund and a sectoral fund, for example, right? Sectoral funds would be constructed in a manner of a growth fund with the focus on a particular sector, right? Whether or not you're bullish on the sector, doesn't matter. So any sector, say there will be within the parlance of an asset management company, there would be, say, a healthcare fund, there would be an IT fund, there would be a banking and financial services fund, there would be XYZ fund, all different types of sectors, and they would specifically invest in that sector, whether or not the outlook is bullish or not, with the mindset that this sector will perform, say, in the next 10 years, 15 years. But this is a sector which will make a lot of sense, say, in my portfolio, right? Me as an investor would be convinced that, okay, I would need to have an allocation per se into this sector. That is me as an investor taking an outlook with the help of my advisor that this is a sector which might make sense in my specific situation of a portfolio. That is not the case in a momentum investing. In a momentum fund, it would be sector agnostic. It would be across sectors. The fund manager or an ETF, which is mapped to a momentum index like a Nifty 200 Momentum 30 index, would only invest in stocks which have shown a price uptrend. Now, this can be a defense stock, this can be an engineering stock, this can be a healthcare stock, this can be across sector, this is sector agnostic. The only edifice, the foundation on which a momentum fund is built upon is that, yes, in the last 3-6 months, in a specific period of time, it has shown a price uptrend and it is investing at any cost. So I feel, okay, these are XYZ defense stocks or some other stocks, irrespective of the valuation, or whether the valuation makes fundamental case or not, I will only go by technical investors and invest on the basis of price uptrend. So it's a very, very risky strategy. And that's the difference between the sector fund and a momentum. Sector fund would actually not invest at any cost. They would, like a growth fund, it would also look at valuations, the PE ratio. But yes, there is sector specific. So it will not be investment at any valuation parameter.
Right. Sanchita, you know, when you're talking about valuations as well, now I want to understand specifically for which investor should actually look at a momentum fund. If I am a long-term investor, does it make sense that I look or add maybe one of these SIPs into momentum funds? Does it make sense for a long-term investor? And you know, in the market sensitivity also, how do we watch out for in terms of volatility coming in? When should you enter and exit such a fund as well, if you already are holding?
Again, really a very good question. And I would answer this by deep diving again further into what is the construct of a momentum fund. Now, a momentum fund, the construct is something which is very, very based, the very edifice, the very foundation is based upon a behavioral bias, right? It is not 100% scientific. When I look at an average diversified equity mutual fund, I would look at very, very scientific parameters like price to earning ratio, capital markets outlook, fundamental analysis, technical indicators, PEG ratio, like I said, innovative products, something which is a great go-to-market strategy, all of that. In a momentum, when I'm saying there is a behavioral bias, a lot of time what happens while in the construction of a momentum portfolio, you take into account recency bias that, hey, this has shown tremendous price increase. My technical charts show tremendous price increase in the last 3 months, 6 months. So that's a recency bias. So you might land up, the fund manager might land up overweighting those stocks based on the recency bias. And then there is something which is known as a confirmation bias. So the fund manager might be tempted, for example, to look at that, oh no, I am seeing this as a trend. Let me take specific data from the market to prove that this is a trend, which is a confirmation bias. So there's a lot of behavioral bias which sets into the momentum investing. So ideally, it is typically meant for very sophisticated investors with a trader mentality. Somebody who is willing to look at a near to short to medium term horizon that, okay, I'm convinced I'm a sophisticated investor with a very large risk appetite. I have the ability to stomach significant volatility. Doesn't matter. I can look at this trend and I wish to make, say, money in the next 3 to 6 months. A person with that kind of a outlook could look at momentum investing. For a retail investor who's a long-term investor, I would think you'd be a little shy and extremely cautious, because if that trend were not to last and if there's a reversal, the downturn can be quite significant.
Absolutely.
So advice is required on that point with your registered investment advice.
Sanchita, I just want to know, what do I look if I'm trying to pick up a momentum fund? Then historical data doesn't make sense, right? Looking at it, because depends on every trend, the fund manager will be changing, right? Their strategy. So how does one look at the past performance, or how do I judge as an investor which momentum fund to pick up?
Yes, absolutely. This is something that has always been the dilemma, because, there's a very common phrase in English and a very wise one that everything rises with the tide, right? And only when the tide turns, that when you see who's swimming naked. So it's interesting to note that whilst everything can go up with the tide, it's very difficult to establish a trend, and especially in markets which exhibit range-bound behavior. For example, currently there's been a recency bias because in the recovery, so from 26 September to May, there was a massive correction which was there in the market. Not massive one, but there was a correction in the main markets. And post-May, the recovery has been good. It has been led by momentum funds. And there's been a lot of talk in the media that, okay, momentum funds are leading the rally. But look at the time horizon. That's just been a couple of days in April and May, right? Actually, even if you were to see the index, which is the Nifty 200 Momentum 30 index, for 6 months returns, 1 year returns, it's still negative vis-a-vis the broader markets. Right? So it's a very risky strategy. So investors who would have gotten in, say, a year back, would still be net negative with respect to the broader markets, mid and small cap markets, right? So again, it's somebody who is very, very convinced that they can play on a fad and has the ability to understand a trend or the trend investing and are not thwarted if the trend exhausts itself. Tomorrow there might be a macroeconomic shock, another headwind in terms of a geopolitical news. So there might be a policy change, right? A trend might reverse. And if you're willing to stomach that kind of a significant headwinds in terms of news cycle, risk on, risk off sentiment, one can go look at it.
Sanchita, is there an optimal way maybe to minimize my risk, even as a trader, or even if you have a short-term view? Is there a right entry and an exit point for such funds?
Very difficult to time the market. I mean, we have all known this in the past. Timing the market can be dreadful in terms of the market always manages to take that pound of flesh if you try and time the market. Yes, but again, excellent question. for our viewers, because the correct, if one at all would like to look at it, I think the most sensible way to go about it would be the rupee cost averaging, which is in layman terms known as the SIP, kind of a route. So systematic investment, very gradual entry into a momentum fund is one which you could discuss with one's advisor. Even when you're exiting, if say, for example, you feel you're a sophisticated investor and you feel a certain trend has exhausted and the fund is not really doing well or moving anywhere. See, because momentum investing, again, let's understand, they typically do not do well in a range-bound market. Markets can exhibit price correction. Markets can also exhibit time correction, right, in which it doesn't really move anywhere in the next 6 months. A momentum fund typically does well when there's a clear, outright strong bull market in which everything rises with the tide, and momentum investing also does well. In a range-bound market, very difficult to make money through momentum investing. Rather, it might contrarily correct. So yeah, a gradual entry is required, gradual exit, understanding its position in your portfolio, how much of an allocation, diversification, understanding your own risk appetite, understanding that not one size fits all is very, very important.
Absolutely, Sanchita. But on that note, viewers, we're actually going to slip into a very short break and we'll be continuing this conversation with Sanchita. We'll actually start talking more about the trends that are currently shaping up in the momentum funds as well. So stay tuned in for that. Welcome back to MF Corner on CNBC TV18. We have Sanchita Mukherji with us and we're talking about momentum funds. So, Sanchita, while we spoke everything about momentum funds, the difference between them, what we should watch out for in terms before investing, but now the trend that has shaped up for momentum funds, you're seeing a lot of momentum in some of these sectors. So I think that's the reason that we're seeing a pickup in these momentum funds as well. Given that we saw that recovery coming in, which you're mentioning, is it the right time for a new investor maybe to look at momentum funds if they have the ability to take the risk, like you've mentioned as well? Is it the right time to look at it?
I would say proceed with caution. I would be very, very emphasizing the fact that one needs to proceed with caution, because one, again, doesn't know what kind of a market is shaping up in the next 3 to 6 months, right? And that is anybody's guess. It's very difficult to do market predictions in the short term, short to medium term. Because again, the whole fundamentals of momentum investing, if one were to look at it, there's a lot of recency bias. One can see that, yes, it has performed very well from 7th April onwards till date. I mean, the momentum funds would be at least at 11%, while the broader markets would be at a 6-7% kind of a recovery from 7th April till date. But having said that, momentum funds, like I mentioned, Nifty 200, Momentum 30 index, 6-year returns, 1-year returns would again not be very significantly high. They're still negative vis-a-vis the broader markets. So let me take you situation-wise. For example, when the COVID recovery happened in 2021, right? Post-COVID, one could see that the economy opened up after the lockdown and everything, and it was a clear case for a phenomenal bull market. So momentum funds definitely did very well. 2022, it wasn't much in flavor of the season. 23, again, they did well because the economy suddenly picked up because of all the reforms coming into play, the structural reforms which were happening, all of that. True. But then, having said that, if one were to really look at from 26 September 2024 numbers, valuations were at an all-time high, right? Trade wars had just erupted January, February this year. Earnings were not coming in in the commensurate numbers. So momentum funds actually went for a very sharp drawdown. And right now, the belief is in the market that after a very sharp drawdown, momentum funds can actually make a huge comeback. Now, that's just a belief. Whether or not that will actually materialize is anybody's guess, right? So it's very difficult to take a stance, especially for a new investor who doesn't understand all of this nomenclature and the technicalities. Because let's understand, momentum investing is only on technical and indicators. If those indicators are proven wrong because of any geopolitical news or macroeconomic shocks, then the reversal can be very sharp for a new investor. And that person will probably never enter the mutual fund industry again.
I think they'll get too scared if that starts falling down and you've invested your money thinking in mutual funds. But yes, you have to be careful where you're investing. Sanchita, have you looked at momentum funds in the recent time? Anything on the momentum fund side that you find attractive? Any momentum fund that one could look at?
No, not really. I'm a ardent advocate of diversified growth mutual funds. I think for investors who typically have a long horizon, and I love to talk about the equity markets with a longish bias. That's my behavioral bias, and I think it's very scientific because 5 to 7 years. It's not a random number when I say that equity markets one should look at it for 5 to 7 years, because 5 to 7 years, actually, if one were to look at it scientifically, that those are the exact number of years in which it takes a country's entire economic cycle and the capital market cycle to play out, right? In terms of the interest rate cycle, the capex being utilized, earnings coming into play. So it's very, very scientific to have a long-term horizon. And I think your regular growth investing works well because the active management and all of that. And also think about it, for a momentum investor, the costs are also there on the portfolio. One has to be very mindful. These are actually very high turnover. So not a very effective strategy if I were to talk about it personally.
Sanchita, just last one quick question. If I had a checklist, when someone is looking at a momentum fund, what would it be? One, they have to be those short-term traders. You're willing to take the risk. Other than that, what should I look in terms of fundamentals?
One has to see whether you're investing into an ETF or an active management fund. So in an active management fund, you'd have a greater comfort because the fund manager would take active calls, inputting certain stop loss orders, inputting certain benchmarks, barometers, in terms of diversifying the risk, which you will not have an access to if you invest in a momentum ETF. A momentum ETF will do exactly what the momentum index does. And whether or not it captures an upside fully and whether it captures the downside significantly is again the construct of the index per se. But in an active management momentum, if one were actually looking at it, the fund manager's ability to understand the trend, to make the shifts in time, to put risk diversification benchmark, like I said, stop loss orders and all of that, that can be done. So one can look at it in that manner.
Okay, Sanchita, thank you so much for joining in with us on the show today, explaining us everything about momentum funds and whether it makes a strategy as a long-term one. No, it doesn't. Short-term, yes, you can go according to the risk you can take. So keep an eye out on that. But thank you so much, Sanchita, for joining in with us. Thank you so much, viewers, for tuning in to CNBC TV. And up next now, you have Closing Bell. So don't go anywhere. For the last hour of trade, they'll take you through the market action.